Welcome back, dear traders. This trading week is going to be loaded with the high-impact events. At least 10 major central banks are set to make their policy decisions. So, investors will have to revise forecast under new market conditions. Now let's discuss the events which took place over the weekend and the forecast for the week ahead. Despite the thin markets in Tokyo and London, the overall market sentiment is clearly a risk aversion. Wall Street closed on a Friday on a pessimistic note, like it happened last week. The benchmark stock indexes closed in the red. The Dow Jones slipped 0.45%, the Nasdaq sank 0.9%, and the S&P 500 closed below the landmark level of 3,900 points and closed 0.72% down. The New York pre-market was gloomy for the three stock indexes. Futures on the key indexes traded lower in a sink. The intraday outlook is hopeless. The S&P 500 is expected to trade in the corridor between 3,780 and 3,910 points. On a Friday, the S&P 500 tumbled below 3,900 for the first time since July 18. The only resilient sector among the 11 sectors included in the index is the consumer protection companies and utility companies. The benchmark stock indexes closed the week with significant losses, and the Nasdaq showed the worst performance, having slumped by more than 5%. Sell-offs on Wall Street are unfolding on the back of soaring inflation, the hawkish US Fed, and the mounting recession fears. US delivery giant FedEx signaled a bad omen with its prediction of a severe global economic downturn and the massive layoffs. The company cancelled its previous revenue forecast for the fiscal year due to low global demand and the recession prospects. This week, the Federal Reserve is due to unveil its policy decision. At the meeting on September 2023, the regulator is widely expected to raise the federal funds rate by 75 basis points. The US Fed has already increased interest rates 4 times, but annual inflation rates are still way above the target level of around 2%. Macroeconomic data do not signal waning inflationary pressure. The consensus suggests a rate hike of 75 basis points. Moreover, Fed funds futures indicated 20% chance of a rate hike by 100 basis points. Hence, interest rates could stand at 4.5% as the Federal Reserve is ready to sacrifice economic growth to tame inflation. Apart from the rate hike, investors will be alert to the Fed's forward guidance, which is likely to be hawkish. So, the official funds rate might grow as high as 4 or 4.25% by the year end. And this scenario pushed yields of US Treasuries by 30 basis points last week to the highest level since 2007. The S&P 500 plummeted almost 5% last week. Besides the US Fed, other central banks around the world are also expected to raise their interest rates. The news will hardly bolster the appetite for risk. The stocks of the US high-tech giants like Apple, Tesla, Microsoft, Amazon and Meta are highly sensitive to changes in interest rates, so the stocks traded firmly in the red in the New York pre-market and thus setting the tone for the gloomy market. Amid the US dollar's rally propelled by jitters, its index is trading at the strongest level in the last 20 years. The US dollar index rose 0.46% to trade at 110.10. And the outlook for the greenback is bullish. The intraday corridor for the index is seen between 110.79, the highest mark hit on September 7, to 109.70. The US dollar is standing tall ahead of the Fed's policy meeting, and the US CPI data released last week showed a further acceleration in consumer prices. Now the market has no doubts about a sharp rate hike at the nearest policy meeting. And in this context, the euro slipped 0.38% to 0.9974 against the greenback. The pound sterling dropped 0.5% to 1.1362, the weakest level in the last 37 years, and the New Zealand dollar and the Australian dollar fell more than 0.7% each. The US dollar gained 0.43% against the yen to 143.49, having slightly below resistance level at 145. Amid the fundamental environment this week and the growing recession fears, analysts foresee a new high for the US dollar index at the level of 110.80 ahead of the Fed's meeting. The loonie is extending its weakness against its American rival. The USD CAD opened on Monday at the lowest level in almost 2 years. The currency pair traded at 1.3321 in the pre-market, and the intraday calendar is defined between 1.3290 and 1.3380. The broad-based strength of the US dollar is affecting the Canadian dollar as the other commodity currencies. Oil prices are falling again today. Crude oil skidded by more than 2% today, wind down by the firm US dollar and in the face of policy meetings of major central banks. Oil prices are also vulnerable to forecasts of a weak global demand. In particular, the International Energy Agency released a forecast last week for sluggish energy demand in the fourth quarter. As a result, oil prices are losing ground. Brent crude futures sank 2.56% to trade at $89 a barrel, and WTI futures dropped to 2.71%. As for the economic calendar, Canada published its raw materials price index, and the index slumped 4.2%. No month in August, mainly due to a decline in energy commodities. Crude oil prices fell 8.1%, gas prices plummeted 19.4%, and the drop in energy prices was caused by expansion in output rates and the flow capacity of pipelines and unscheduled shutdowns. Such a price dynamic is typical only for Canada because sky-high gas prices have been the worldwide trend. The annual raw materials price index in Canada jumped by 17.6%, whereas analysts had projected a modest growth of 3.2%. Meanwhile, the crypto market is plumbing the depths of pessimism. The worst-case scenario suggested by our analysts has come true. Bitcoin is aiming to test $18,200. The token lost roughly 6%, but rebounded off the key support. By the moment of recording this video, the crypto has recovered by $18,700, but still looks fragile. The second largest token in terms of market capitalization, Ethereum, dropped by 5% to $1,385, but regained its footing to the level above $1,300. All in all, the second popular crypto has shed almost 10% in the last 24 hours, and other tokens such as Ripple, Solana and Litecoin have tumbled from 0.05 to 11%. As for the intraday forecast for Bitcoin, it might test again the level of $18,200, aiming to retest $17,600. A more optimistic scenario is a trading range between $18,400 and $19,600. And we wish you to trade with the profits despite the overall risk of mood, and there are always reasonable trading strategies. See you online tomorrow.